This is the fastest video you're going to find on ICT, silver bullet, what to do, how to make money. Let's go. Okay, silver bullet terminology, fair value gap. This is what we're looking for. 1, 2, 3 candle formation. First candle is going to close. We're going to wait for the second candle to close, and we're going to wait for the third candle to close. When that happens, we're going to focus on the second candle. All right, so move the second out, and you're going to see where the first one finishes and where the third one starts. Is there a gap in between those two? That's what's called a fair value gap, and we're going to label that. You're going to make a box, command to magnetize it, and we're going to label that a fair value gap. Easy? That's a fair value gap. Now we know how to identify a fair value gap. We need to identify liquidity. Let's do that next. Shifting gears to the 4-hour chart. Okay, up here, 4 hours. What we're going to do, we're going to bring an indicator to make it so simple for you so you don't have to do anything. You literally just turn it on and I'll tell you how to trade it. Right, we need previous daily high, previous daily low, weekly high, weekly low, and monthly high, monthly low, Asian high, Asian low, London high, London low, New York high, New York low. That's all it is. Ready? We're going to do that with a click of a button. Done. Right, what we've got here. Click on indicators. You're going to go all in one session. Weekly Monday previous by Tex Moon Beam. Click on it, favorite, and then you've always got it and you've saved it. When that comes up, what you're going to do is go into the settings, that little button here. Okay, so we open the settings. We're going to go straight to the label. Abbreviated label size is going to be large. Show Monday high and low. Why do we need this? It's because it's the start of each week. We're not going to do this for this video, but you can. You do have the option to have the open. It will help you with the gaps. But for simplicity reasons, we're not going to take that. We're going to take the previous daily high, previous daily low, the weekly high, weekly low, the previous weekly high, weekly low, the current monthly high, monthly low, and the previous monthly high, monthly low. Now, that is a lot of information, but we're not doing it. The computer is doing it for us, so that's okay. Go back up. We're going to go to the previous daily high. We want the high to be red, representing selling. The low to be green. The 50% to be black. And click on the 50% here. Current week, we're not going to bother about the 50%, but we are going to change the colors to the same like the daily, so we know what we're looking at. So that always the high is going to be red, always the low is going to be green. And it should look like that. Opens, show current week, you have that option, and current month. We're not going to do that. We're going to jump onto the Asian session, London session, and New York session. We're going to change this time to GMT -4, or will bring us to New York. And then we're going to go to this color here, which is the time, and they're going to change it to whatever we want. I like the Asian to be, let's say, green. I want the London to be red. Ignore these ones. These are the opening levels. And I want the New York to be orange. I'm also going to click on history because I want to see what's happened before. And this is what it's going to look like on the 1 hour. But when we go down to the 5 minutes, zoom out enough so you can see on the right side what lines we've got here. Remember that fair value gap that we identified? This is live data from today. The price created a 3 candle formation. 1, 2, 3. The trade came back into that fair value gap. Now with liquidity, we want to see 3 things. With the Asian, London, and New York session, we're going to see if it will have a run to the high or the low of the previous sessions. If it has already, we're going to look for the retracement from the Asian high, London high, or New York high or low, depending on what the price action is doing. And we can see that here. The New York low and the London low from the previous session were at the same price. So we had a run below these 2 sessions, and then we had a pushback all the way to create a new high. Now, can we see any fair value gaps here? No. The first fair value gap came from this 1, 2, 3 candle. 1, 2, 3. So that is the fair value gap. The aim with the entry is after the third candle has been formed, we're going to take the closest price to the top of that range. So you're going to drag a line on the bottom of where that candle opened or closed on the third candle. Any price action, and you can see this, it did it 3 times. We're going to take that entry. Simple. What we're looking for: Asian, New York, London sessions. Are we going towards a liquidity? And what does that mean? For instance, here we had a liquidity draw above the green, which is the Asian session. So we had that during the London session. Okay, we've understood what fair value gap is the formation of 3 candles, and we're looking at the body in between. We've placed liquidity onto the chart. Now let's chat about what that liquidity means. With the previous daily high and daily low, what we're going to be looking for is these green and reds that we've colored already. So the previous daily high and the previous daily low, the reason we've put the 50% is going to be really crucial with our bias. We're only going to be buying if the price is below the 50% of the previous daily high, and we're only going to be selling if the price is above the previous daily 50%, which says there. The reason we're doing that, because it makes it simple. We don't have to think about it. Are we below? Yes. So what we're looking for longs. Do we have a fair value gap that we can trade? We do. We've identified it here. So if we want this price to go high, where do I want it to go? To my closest area. What are the closest areas? The high of the session. If I keep going up, the second line. We've got a monthly high or a weekly high. We have a previous monthly high. So that gives us a nice area where we can tackle. So I'm looking for a trade that's going to go and give me 10 pips. My first exit will be 10 pips, 14 pips, 17 pips, and 20 pips. And if I wanted to hold this all the way to the previous daily high, 51 pips. What about stop? Always, always, always hold the stop below the first candle formation. That way, we're going to be risking 4 pips for a potential run to the previous daily high for 50 pips, or 4 pips to make the first 10 pips, which is more than 2 for 1. Happy days. Okay, so now we know target, which is going to be automatically done with the indicator. Now we know stop, which is always going to be below our first candle. What else is left? What is the time frame? Remember, ICT Silver Bullet is time-based. So we need to get a new group of areas where it's going to tell us if we're going to trade or not. Luckily, we have created another indicator. Go on the indicators and we're going to look for FX market session Boitoki. Okay? When you turn on Boitoki, we're going to go into the settings and I want you to copy exactly what I've got here. Right. These are the times that we're interested in. London Open. It will be from 3 a.m. to 4 a.m. New York time. New York AM session. These are the kill zones. 10 a.m. to 11 a.m. And New York afternoon kill zone, which is from 2 till 3. These are the only times you're going to be trading. Otherwise, I'm going to be there and tell you off. So what we've done, red for London. I've actually labeled it London Silver Bullet. Underneath, we're going to go New York Silver Bullet, or you can call it kill zone. And this will be AM and New York Silver Bullet 2 till 3. Choose kill zone, silver bullet, whatever you feel better. You've got another session that you can add there, but we're not going to add it because we're only interested in the kill zones of those 3 sessions. And there you go. That's your indicator for your kill zones. Now let's bring it all together. So what do we have? Let's go with yesterday's trade. We have a red box, which is my London session. An orange box, which is my New York session. My green box, which is my Asia session. Okay, I went back in to the indicator and changed the colors because they were wrong. So what I had done is GMT was -4 here and I am New York time. So make sure this is on GMT, UK time, and then you're visualizing it on TradingView on UTC -4. Now we can see that we're in the London session at 4 a.m. in the morning. What is at 4 a.m. in the morning? We know if we put our other indicator now, that's the close of the silver bullet. Does that mean we can't trade it anymore? If we've got that entry, that means we can hold it and we'll see what happens. If we haven't, then we go to the next session. Very, very simple. Yes or no. Right, let's summarize. What do I have? I have red is London session, Asian session is green, orange is New York. We know the highs of that and we know the lows of that. We're looking for liquidity draws. What else are we looking for liquidity draws? Previous monthly highs, previous monthly lows, weeklies, previous daily high and previous daily low, and the 50% of the previous daily high. Why? Because we want to see if we're going to be buying if it's below that 50% arena or above the 50% we're going to be selling. Simple. So you can tick the boxes, turn everything off. So this is going to be your process. We're on a 5 minute. We're always going to be trading on a 5 minute. I'm going to click on my kill zones. Boom. Let's say I'm here. I see 1 candle, second candle, and third candle. I can identify my fair value gap. I'm going to take that entry. Second, where am I targeting? I'm going to open the other one. Boom. Top of the London session, but that's probably not going to be enough. What's the next line? Let's see what it is. Monthly high, weekly high, and previous daily 50%. I can target all these. Where's my stop loss? Stop loss is going to be below my first candle. Now we can see here it's coming in, and we're going to drag that line below there. Okay, so now we've got our entry. We know that we're going to be risking 5 to make what? Double that. So we're going to try and make 10. Where does that take us? Above the high of the London kill zone, which is great. So then we can wait and see if we're going to get that trade. If not, if we want to hold that trade, we can hold it to the next line or the next line or the lines. You don't have to think about anything. You've worked out really hard to get everything ready, and now you can just trade it without any thought or psychology. Okay, let's see when we can trade and when we can't. This will be your example. New York silver bullet. Let's see if we can trade this. What we want to look first, we want to look at where the session starts. Here. Are there any fair value gaps formed? No, no. Oh, there's a little one there. And then you start putting 1 and attaching it there. We need to zoom in to see what's going on. You'll be like, how did you see that? It becomes very easy when you start trading with this concepts, because remember, you don't have all these candles. All you have is your first candle there, closed, and that's where it stopped. Your second candle, which closed down here, and if I go 1 candle forward, we're going to see that that candle created a small fair value gap there. What do we do next? We know that we're going to be interested if the price is trading down here. What's the next thing we need to see? Obviously, we don't have it now because it's not the current position, but we're going to be looking if it's at premium or discount. If it's at premium, we can take a short. If it's not, we ignore it and we move on. We want high profitability trades. So what do we do next? We wait. Wait for the candle. Let's see if it's going to tap us in. Boom, tapped us in. Where's our stop? Our stop is going to be quite far away. It's going to be above there, but that's okay. Let's see what's going to happen. That's where our stop is going to be. So where's our stop going to be? Remember, it's going to be on our first candle. So we're going to look at the first candle of the formation of the fair value gap. There it is. Why not this one? Because this is the second candle. We always go to the first one. And we're going to put the stop just a little bit above there. So let's see how far that will go. We've got our entry there. Our stop is 4 pips. We need to make 8 pips. Let's see if it's going to give it to us. We need to go down there. 2 for 1. Then, next candle. Next candle. Ooh. Yeah, baby. There we go. That's a successful silver bullet trade. We've had 2 now. Let's look at one more. New York session has just opened the kill zone. We are waking up and we are seeing that box starting to form. Replay, we take that. First candle has closed. And what are we looking for now? We're looking for fair value gaps. Where do people go wrong? They start taking this as a fair value gap. But we're not in the kill zone, guys. Wait, be patient. This is your first candle. Let's see. No fair value gaps. Now, this is a question. Who spotted that? Fair value gap there. We're going to take that. Remember, we have to take it when it forms. Boom. What we have to check first, are we in discount? Are we in premium? If we're in premium, above the 50%, we can short this. We're going for shorts. If it's in discount, we ignore the trade. Okay, we're going to place our entry. and we did enter there. Our first candle is going to be this one. The second one is this. Third one is this. Now our stop is going to be all the way up there. So let's see how much we have to make this a good trade. That's going to be 12 pips. So we need to make 30 plus pips. So let's make sure we put that in. 39 pips. That's what we need to make. We're going to make a 2 for 1. Sorry, we need to make 26 pips. That's where we need to go. Okay, let's see if that's going to happen. It's consolidating. It's coming higher. Not stopped us out yet. Yes. Success, guys. That's 3 in a row. Silver bullets. And now, whilst we've been talking, I have taken this trade with the current silver bullet. And I'm waiting to see if that's going to break to the higher price. I know my zones. I know where I want to go. Simple, guys. Go and trade it. How quick was that? Right, before you go, make sure you go to my website. I am picking 5 people and I'm doing a 6-week challenge where I'm going to teach you everything I know and you're going to pass a prop firm challenge. How amazing is that? And I'm going to do that for free. So make sure you go into the description, click on it, drop me an email, and if you upgrade to the Vanguard, which will be closing in 2 months' time, it will be becoming private, you will be in for life. So you pay $19.99 for 2 months, and then you've got it for life. You will have me every second week. You can come and ask me questions live on Zoom. So if you join the Vanguard, next week I'm doing interviews for the 6-week challenge, and I'm going to be choosing 5 people live. It's going to be amazing. If you do want to be one of those guys, you do have to come into the Vanguard, $19.99. Eventually you're going to get that for free in September. And the aim here is for me to get you to pass your first challenge in prop firms. And from there, you're going to be on your own, making tons of money and living the life of your dreams. Okay, guys, this is what you're going to see when you click on the link. Join the one challenge away. You're one challenge away from quitting your 9-to-5, becoming financial free. As you can see, I've gained 24 grand from payouts from the Fivers, accomplished, and from the bootcamp. I do trade ICT, as you know, and now you have the silver bullet. Go and watch my video about quitting my 9-to-5 through trading prop firm, ICT, and having multiple green days. As you scroll down, it's going to pop out with your email. Put your email in there, and you're going to be on my email list so you can know when your challenge starts and if you want to be interviewed. When you've done that, read this because it's insane. I'm giving you value of $767. You're going to be getting it for free because the Vanguard is closing down and there's only 58 spots left. So make sure you secure. If you press on this, it's going to take you to the upgrade of the Discord and you can join the Vanguard. 58 spots left. And from September, those spots won't have to pay a penny. You're going to have this forever. So I'm super excited for you guys. So there you go. ICT, silver bullet. If you want to learn more, come and join us. Until next time.